Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavaloo, and we've got longtime fools Tyler Crow and Lou Whiteman giving a 1 to 10 rating to a company that may fancy itself the wolf from Pulp Fiction. It's FTI Consulting, ticker symbol FCN. First, we'll talk about the strength of its business, including factors like industry and competition. A 10 is invincible, a 1 is hopeless. Lose it a 6. Tyler, you're up there at an 8.
Yeah. So FTI Consulting, very generic name, but kind of a specific business. They are an advisory consultancy business, but they're pretty specialized in a lot of like risk mitigation. It goes into things like corporate restructurings, accounting forensics, and even like, helping people get through bankruptcies and things like that. Like, look, a business that specializes in bankruptcies and corporate restructurings isn't exactly going to be knocking it out of the park when like business conditions are good, right? Nobody brings in bankruptcy consultants when things are going great. But I think there's an appeal to a business like that when in a counter-cyclical nature of this is a business that's going to do incredibly well during tough economic times because everyone needs to ask them questions. But, even in good times, there's enough like other parts of the business that it does relatively okay, even when things are, what we would say is not the ideal situation for the business.
Yeah, as Tyler said, this is basically a crisis management company. They're who the board calls when something goes wrong. Look, there's more business there than any of us probably would like to admit or wish there was, but it can be steady. But like Tyler said, the downside here is it is a niche business that has no real way of creating its demand. It's somewhat reactive, and it only works when it works. I come to this as no complaints, but not a wow for me either, because in half of the market, it is just kind of waiting around, which I ended up on a 6 with that.
If you're wondering what the FTI stood for way back, it was Forensic Technologies International. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. This time, both of you agree, Tyler, with 6s.
Yeah. Consultancies, they're people businesses. This is not really a capital allocation job for management. It's a keep the people happy and hungry job in your corporation. And I think on that front, they've stumbled a little bit recently. A former employee started a rival firm. He was kind of one of the rainmakers for its economic consultancy business. And he siphoned off a large portion of like his lieutenants when he was there to this new thing. So FTI has lost a decent amount of headcount from this economic consulting business. And this was one of their high growth areas of business, especially during like good times. It's they're like expert witnesses in litigation cases. And that was like the new haymaker for FTI Consulting. And with that going the way, it kind of is a little bit of a scar on management because you needed to keep those people around.
Yeah, Steve Gumby, he's been in the position for, I think, more than a decade, 40 years experience, 100 million or so in stocks, who's got skin in the game. But look, now, Tyler can say, right, not all of this is their fault, but, we've had some quarterly misses. The stock has underperformed the S&P 500 by about 90 percentage points over the last 5 years on a total return basis. I get that that's not on the CEO entirely, at least, but I do feel like a fresh voice could be needed here. And so I'm at a 6. I don't want to slam the guy, but also I don't think that the thesis changes if Gumby goes out the door and someone else comes in. It might actually help.
For financials, a 10 is a fortress, a 1 is yikes. Lose down at a 5. Tyler, you're higher at a 7.
Yeah. Like I said, with consultancies, these are people businesses. There's not really a lot of assets because you can't put your sales team on a balance sheet. So I'm not going to fret too much about the balance sheet or stock-based compensation because, look, you got to pay sales teams, you got to pay experts, and they typically want to get paid in equity. It converts cash at relatively high rates, and it's been using it to buy back shares and actually reducing share count despite the stock-based compensation. But considering that there isn't much else to do with the cash, like you don't invest in it except for maybe some new office chairs, like there isn't much else to do other than buy back shares.
Yeah, it's fine. And that's kind of my theme with this, with FTI here. It's like, everything is fine, not really compelling to me, but fine. It's been some erratic earnings. They did just beat in the last quarter and missed the last 2. But again, just kind of the nature of the business. No dividend here, did announce a share repurchase. So at least that's something. I look at these financials and I really don't see a compelling reason to make me want to buy or a compelling reason to run away scared. So I'm at a 5.
Can you tell that Tyler was the one who wanted to do this stock? Lou, let's talk about valuation. How well will FTI Consulting stock do over the next 5 years? And how safe is it? A 10 is a sure thing. A 1 is a lottery ticket.
So here's the plot twist, right? Because for all of my, I guess, dismissiveness, is that the right word? FTI does seem like a pretty good contrarian play for when the overall market is a mess. And hey, we are in times like these. The M&A business might take a hit in a recession, but litigation and restructuring units should be salivating, right? So I think over the next 5 years, this can be a market beater, but not by a ton, which takes me to 10 to 15%. Over the longer term, I don't know if I see this as a real wow market beater over time. And I don't think it's a slam dunk. So I'm back to my relatively benign 5 for safety.
And on the contrarian, I guess, sort of take, I went lower and I said 5 to 10 with a safety score of 7, because I actually think the business is going to struggle finding its feet after losing a decent portion of its economic consulting staff to that rival firm that I mentioned earlier. So there's over that relatively short period of between reestablishing itself with that economic consulting business and the rest of the business doing well. I think there might be some offsetting features there. But strangely, the wave of corporate restructurings from a tougher economic times, again, as Lou said, this is what they live for. And that could be the one thing that actually makes it do better than what I'm predicting.
It's time for everyone's favorite topic. Lou, is there a company in FTI space that you like better?
So generally with consultants, I like scale and reach. We've talked about Accenture between the three of us. I do think Accenture is just a safer buy than any of these niche consultants.
I can't pound the table on anything in particular, but I'll say Excel Services, ticker EXLS, not really in the same niche either. They're much more like a professional service implementer in the healthcare, energy, insurance sector, doing a lot of back office functions. But at the same time, good business, getting into the AI implementation game that could be big for consulting firms. And one of those fast growing, uses a lot of low cost labor from overseas that has worked out quite well for a lot of consulting firms. Thanks
to Tyler and to Lou. They've given FTI Consulting the overall score of 6.3 out of 10. Check out, it's a Moneyball pick, so check out its Moneyball scores and write-ups. And go watch the Accenture scoreboard, which we did recently if you haven't already. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Manhattan Associates. Till then, Fool on. Another in our long line of, hey, can we change the name on this companies?
Yeah.